Good morning and welcome to the Market Prep My Futures family. It's Thursday, June the 8th. My name is John Hoagland. Thanks for trusting me with your time. As always, we are going to seek accurate context this morning, think about risk management, and always remain patient in our trading. So, has anything really changed much? We did have some economic numbers come out this morning in the form of jobless claims. Initial jobless claims was a little bit higher than expected, but continuing jobless claims was considerably lower than expected. So some mixed numbers there. At 9 o'clock a.m. Central this morning, we're still waiting for wholesale inventories, which is the preliminary number. 9:30, the nat gas numbers due out. U.S. stock futures really steady, kind of mixed here this morning in early trade anyways. Main focus is going to be on next week. Lots coming. Tuesday, the CPI numbers come out. Wednesday, the PPI numbers come out, as well as the FOMC meeting release. So we've got an action-packed week. Next week, this week, not so much. Some smaller ranges, some decent opportunities we saw yesterday. We'll see what we can find for us today. But I think one of the reasons that things did fire up a little bit yesterday was the fact that the Bank of Canada raised rates by 25 basis points, which was not expected. So, we've got some now questions here in the U.S. on what the FOMC is going to do as far as changing, raising, pausing rates here in the U.S. We had a pretty decent jump in rates in the treasuries that have now kind of come off a little bit, but we're going to be waiting and anticipating and hedging and positioning for next Tuesday and Wednesday. Crude prices have remained somewhat choppy through all of this with, the OPEC announcement. The Saudis going to maybe cut production, but questions as far as the economy is concerned. Really just kind of a tug of war going on here in crude. It looks like we may be getting close to a kind of an upper extreme of the area of balance we've been in for about a month, if not more. So we've got the VIX this morning up a little bit, 1421, 14.21. It was 14 even yesterday at this time. Still a very low number. Keep your expectations reasonable as far as profit targets are concerned, unless something considerably important changes and throughout the day today. Dollar index down a little bit this morning, 103.74. It was 103.92 at this time yesterday. And the yield on the 10-year largely steady, right? It's 3.78. It was 3.7% yesterday. We've got to remember to hit the lucky like button, share, comment, question, feedback, heckling, and love are all welcome here. Make sure you subscribe to our YouTube channel. You get notified when we do go live. It's always good to see everybody. We got Rooster first in the room, winning the prize and crowing early. Scott saw and he conquered. Shaw, good morning. Lacey says good morning. Even Beeks says good morning. Dimitar, good morning. Jimmy, Dan Trader, Marcus needed Joseph, that rally sweater. There you go. But I'll be sitting here sweating. What is it out today? It's near 60, but it's going to warm up throughout the day. Got the windows open. The sun is shining. The birds are chirping. I've got looks like a heron in the pond behind me doing a little bit of early fishing this morning. It's a beautiful day here. Hopefully it is where you are. I know out on the East Coast, you're getting a lot of that smoke from those Canadian wildfires. And boy, that's tough. I would not be very happy about having to deal with that. So we feel for all of you, but again, hopefully it'll get past us and we can get back to breathing good air, right? Caprice, good morning. Will, me, or is that Miami? Matthew, good morning. Jason, John, Charles, Alejandro, Stephen, Travis, Chad, Bill, Jason, good to see you. I got lost again here. Where am I? There we go. John, Anissa, DA, good morning. General, good morning to you, peeps, as well. Robert, good morning. Dr. VJ, I've been sending Jack a message for you, Dr. VJ. Ashraf, Ash, good morning. Rusty Golfer, Sarah Hall, prayers and love to you as well. Pete, Ryan, Gnostic, J-Man, Will, Shy T, the Stash, good morning. The Real Deal Trader, good morning. Hottie, good morning. Rooster, did you all see the super bullish AAII, which means we're probably in for more downside, right? How about it? Rooster, I know you had a good day yesterday. It means nothing to today. Start from zero every day. If you start to get, loose with your risk, we do see that sometimes our traders who've had really good days follow those up with some bad days. Not trying to put a whammy on you, Rooster. Just trade what you see. Stick with your program. Stick with got you there yesterday, and we're looking forward to seeing another good day for you today as well. Haggle Matters, good morning. All the smoke will clear. Yes, it will. Lance, good morning. Trading Research, Jay. Yeah, it's been smoky, but much better than in Canada, I'm sure, right? Phil, good morning. Hyperhidrosis, not yet for the September. We're still trading the June contract in the equities. Volume is still greater so far. We'll be watching that, of course. Zero clouds and 80 in Florida this morning. Nice job, Rusty Golfer. We've got Dan Trader, figured it was too warm for the rally sweater, right? Rooster, yes, sir. Excellent. Good job. Mark, good to see you this morning. I'm going to pop the link in for the Zoom meeting for Make Hope Money right after the prep this morning. We're going to be changing that. I think we're probably going to be just going strictly on YouTube as we get a couple other things sewn up for Top Step TV. Unless we do some afternoon ones, which we may pepper in from time to time. Who knows? Just stay tuned, right? All right. I think we've got pretty much all of our business taken care of. Let's get into the charts now so that we can be ready for Make Hope Money right about 8:20. So if we can take a look at the S&Ps on the daily chart, let me put my spectacles on here so that I can see my own handwriting. So what did we do yesterday? Well, we did what we thought we might. We looked at the weekly high. We looked at the weekly low. We got really close to both ends of it, and we did not take it out. But we did increase some volume on the way down. We also added open interest of an estimated 8,300 contracts. What does that tell us? Well, it doesn't tell us much right now because it's in rollover. Rollover is causing those numbers to be more and more blurry. So until we see some meaningful participation outside of the previous weekly high and low, we're probably going to be remaining in range bound rules. We are testing shortly. We'll be testing in regular trading hours the lows that we were kind of focusing on as extreme yesterday. And maybe this will be a little bit easier to see here on the 30-minute chart. So yesterday we looked at this and said, well, if I'm going to be working the extremes, I'm going to be looking at Monday's high and Tuesday's low. We traded up to Monday's high. We traded down to Tuesday's low. We looked below that in the overnight session. Not worried about that. I'm more worried about, are we going to retest these levels down here in regular trading hours? Right now, we don't have any overnight inventory. Looks like the market is going to be opening in range and in value, which lets me kind of relax a little bit and say, maybe the better trade locations will come as the day goes on. Okay, that said, pretty decent push to the downside, V-shaped, not supported by a drop in open interest, by but an additional open interest. So the push to the downside does hold a little bit more water than the NASDAQ did. The NASDAQ actually lost open interest yesterday, and we'll see that shortly on the charts. So we are just kind of opening where we left off yesterday. Well, what are the numbers going to tell us? What is the digestion of the jobless claims numbers going to tell us? Was it impactful? Was it not impactful? I'm looking at this as more of an opportunity to possibly look for shorts on strength here this morning. There's a specific level which Dalton calls the afternoon pullback high, which I'm going to be focusing on. If we can't bring any meaningful price action above this afternoon pullback high, okay, we're going to call that 42 83.75, 83.50, 83.75. If we can't bring any meaningful participation above there, I think that the market is tired to the upside. It's just another level for us to look for an opportunity. And I'm going to be looking for the market to kind of maintain price below that level if we're going to just go range bound or continue to the downside. Meaningful participation above that level changes it. And look at it. I mean, it's just about halfway from the high to the low for this week. It seems to almost make sense. So take a look at the TPO chart. You'll see this afternoon pullback high. So we had a normal variation trading day. The IB was the high of the session. By the way, 6 out of 7 of our markets today did leave the regular trading extreme at one extreme of the initial balance. So here's our B-shaped profile, not supported by a drop in open interest, actually increasing open interest, probably placing some bets in shorter time frame. We have a weak low down here. This is not a very strong low. There's no excess here. We also have the afternoon pullback high, which is right up here. Again, that's at 43, whatever, 4,300. Let's just call it 4,300 because nothing is finite in futures trading, right? 4,300, 4280. What am I talking about? 4284, I think is a legit number. So, as long as we hold below that, I think we may be looking for opportunities to sell strength. We got to remember that we did not really show any signs of acceptance below our range that we called out yesterday. It's Tuesday's low, Monday's high. We traded to both sides, but we haven't changed anything in regular trading hours about this area. So still trading range bound, staying patient, and hopefully finding opportunities as the day goes on. We'll see if we find anything and make home money. Excuse me. Yeah, it'll auto roll for you on Trade of 8. Will rollover and FOMC say it isn't so. Well, it is. Here's crude oil. So it is coming into rollover now. Every month we have to deal with a crude oil rollover. So it's kind of choppy, in range, in balance. The market hasn't really changed much as far as the view of the context and kind of medium time frame, right? We're going back about a month here, and we're still in that area of balance. So we lost 13,000 in open interest yesterday. Volume is a little bit low, and that also could be a beginning pump kind of function of rollover. 13,000 loss in open interest. That's a pretty good drop. We have been seeing crude oil increasing in open interest relatively consistently. Now we're in rollover. It's probably going to change. Take a look at the 30-minute chart here. Let's see if we can find any good information or opportunities. So we've opened in range above value. We're putting in higher highs and higher lows in short time frame. Last week's high right up here. This is interesting because it's last week's high. We've seen rejection above this area already this week. So this looks like an interesting opportunity, but again, opening in range. Now we're kind of bordering value. So I'm going to try and stay patient, and because there hasn't been a big change in the perception of value of a barrel of crude oil. Let's say we are holding a little bit of overnight inventory to the long side. If those start to reconcile, we could see price come back down to settlement, which may be an opportunity for us. Look at the TPO chart. Normal variation day, neutral in stance. IB is the low of the day. Not a very like, it's a low excess high, but above that we've got an excess high that came in on Monday. So this area up here likely to be tough to get through. Look for opportunities up against that. As far as downside opportunities, if we're in range and in value, I'm going to just let this market establish an early range and then work the extremes. You guys hear me say that. What is working the extremes? Well, the initial balance is really the range for the first hour, unless it's being extended at the end of that first hour. Then you would add any extension outside of that. But it just gives you some sort of early reference to where traders are comfortable doing business and where the extremes of those comfort levels are. I don't want to trade here. I don't want to trade in the middle. I want to trade where there wasn't or isn't going to be a lot of time spent. I want to trade down here. I want to trade up here. I don't want to trade in the middle where everybody seems comfortable to trade. That's not where you're going to get your biggest bang for the buck. All right. Yeah, there are different people, General, that view the opening range in different time frames. To me, the opening range is I've got it set at a minute. Some people like a 5-minute opening range, 15. I've even heard of people using the initial balance as an opening range and then looking for opportunities as the market breaks out of the initial balance. I haven't proven any of that does work or doesn't work, and nothing does work all the time and nothing works every time. But so it looks to me like we've left the opening range in crude oil at the high of the session. Let's see. Yep. Opening range is the high of the session. Pretty big opening range, though. Well, not terrible. 22 ticks. That's not too bad. So opening range remains the high of the session in crude oil. That can be useful information. Did we look at the TPO chart? Yeah, we did. Okay. What about the NASDAQ? The NASDAQ is, and usually is, telling a different story than the S&Ps. So volume was good on that pullback, right? Open interest lost. We lost open interest in the NASDAQ where we gained it in the S&Ps. Function of rollover? Maybe. Now we've taken an overnight look at last week's low, which we found support in the overnight session. So balance and breakover rules continue to apply here as they do in the S&Ps. Last week's high and low rejected on both sides. So those are really the extremes. I'll be looking for possibly bigger opportunities aside from weekly kickoff levels, but we've got a lot of space around us before we get into any longer term inventory adjustments. So here's the 30-minute chart. Much more directional day yesterday in the NASDAQ than the S&Ps. As a matter of fact, it was a whole different market state. It was a trend day. We put in a late spike at the end of the day. There's a lot more nuance here in the NASDAQ than there is in the S&Ps. S&Ps, I'm still kind of searching for nuances and ruling reasons for trades, aside from the fact that we have an opportunity to trade near an extreme. So NASDAQ, we're still in balance, still in and the S&Ps really we're in balance breakout rules. Well, we did have a late spike on Friday or yesterday, so that's going to be a big change. Take a look at this TPO chart. I'm calling this a trend day. We one time framed lower, and then we closed with a late spike. The base of this late spike is 14,366. 14,366. Looks like we're going to be opening above the late spike. Well, that would mark potential rejection of lower pricing. Remember, the late spike is when price moves away from the previous range right at the end of the day and doesn't have time to mark acceptance at those levels through time. So showing that we're probably going to open above that may mean that this will remain excess at the low, rejection of lower pricing. We also have another afternoon pullback high, which puts us right up here. 14,388 was where I kind of marked that level. And if we cannot find meaningful participation above that level, I still see that this level is somewhat pivotal. We get up there. If we can't hold and build volume up above that level, then we may see this market roll over and head to the downside, even though the most important nuance on all of these charts today is the fact that we had a late spike and we may be rejecting lower pricing in the NASDAQ. There's so much information packed into next week with the CPI, PPI, FOMC. I'm looking, especially coming in with rollover at that time. It's, the longer time frame traders are going to be so hedged and so keen on getting a cheap rollover. I don't think that they're really going to be doing much participation in directional markets. That said, the market loves to make a liar out of me. And as we all know, anything can happen. What about gold? Anything going on here in gold? Pretty deep move to the downside yesterday after the trade numbers came out. And then, of course, we had the Bank of Canada raise the rates. So that knocked us around here in gold a little bit. Downside drive does bring some decent volume, not incredible volume, but it does spike volume a little bit. And we added only 500 in open interest to the downside. So the move to the downside yesterday, not necessarily hollow, but definitely dug out by a squirrel or something a little bit. So the downside move wasn't all that gratuitous as far as bringing new business in. Doesn't surprise me that price is recovering here this morning. What about this 30-minute chart? Overnight inventory is long and longer since 7:30. We're basically back to the point of control from yesterday. There is, some potential volume repair to look at here. Remember, we got overnight longs. We're right now in the middle of range and value at the point of control from yesterday. If you haven't participated in this upside move, I think I'd wait and demand some sort of structure on either side in the day time frame to look for my opportunities today. Here's the TPO chart. That's a mess here. So, it's a pretty narrow range here already. Double distribution with a pretty weak low. This is a poor low here. This is not a strong low. Kind of a low excess high as well. We've opened. We are now in repair area, right? We've got a double distribution when we open between the assumed points of control from each of these distributions of time and volume. That can mean that we're going to trade to both. It's entirely possible. Everything is, of course, probabilities, right? Yesterday's IB high was the high of this regular trading hour session. We're right in the middle of it. Patience. All right. Here's the euro testing to weekly kickoff low, stopping short 3 times this week. Now we're starting to see some buyers come into this market. Pretty decent volume yesterday. and a increase in approximately 500 in open interest. Not all that impressive, but the day wasn't all that impressive. It was kind of unconfident. It ended up like a doji, kind of a very long shadows and a very small body here. So there's not a lot of confidence in that bar. Here's the 30 overnight inventory to the long side. We didn't really open with a gap. We've closed any gap that may have opened, and we're continuing to try and push to the upside. Watch the dollar. We are holding some overnight longs here, and if these weaker hands longs get the idea that they're not going to get paid anymore, we could see a pretty good pullback. Here's the TPO chart from yesterday. Normal variation, weak low, weak high. Anything's going to happen. Not really showing signs of acceptance in range from yesterday. Certainly not inside of value. So with value moving higher, I'd probably be looking for opportunities to buy weakness unless we start to really spend some time back inside the range from yesterday and or the area of value from yesterday. Here's the 10-year. So we get a real good test of last week's low here. This swing low. Yesterday, volume was pretty decent on the move to the downside, adding 15,000 contracts to open interest. So it's not necessarily hollow, but not all that impressive an auction to the downside. So we get an opportunity to test last week's low, and that turns out to be somewhat supportive. Here's the 30-minute chart. Here's the big move to the downside. We've opened, we've closed any gaps. We're back in range, back in value. Any overnight inventory has been adjusted. What am I going to say to this? I'm going to say patience. Patience. We're right at the comfy level from all day yesterday, if you can call it that. I mean, it was a double distribution trend day with a weak high and a weak low. We're in between the points of control from the areas of consolidation that created this double distribution. This distribution has its point of control here. This distribution has its point of control here. We've traded to this one. Let's see if we can trade to this one. Repair is what that's called. It is entirely possible. And what about the natural gas? Well, we've been kind of talking about this as a potential bear flag. It broke out one day to kind of create another bear flag. Yesterday, we lost 18,000 in open interest on a push to the upside. So that probably indicates some stuck shorts getting out, some shorts probably taking some profits. Take a look at the 30. So here was our first attempt at a bear flag that broke out. We talked about it that morning. We said, this thing could come all the way back up and test this trend line from the other direction, which it's been doing. And now we've got another kind of bear flag situation. So I'll be watching if we get an opportunity to see some participation below this trend line, to see maybe some continuation lower. I mean, isn't it summer? Here's the TPO chart. Initial balance to high, excess low, normal variation, extreme day. Don't really have anything for this unless we can take out the low of that trend, that bear flag, and see if we bring in some participation down there. So yeah, you yeah, no problem, Les. No problem, Les. So I'll be, you guys don't have to worry about let me take a look here. Hang on a second. So far in the June S&Ps, we've got 212,000 contracts traded. September, 24,000. So there's still 10 times the volume in the June than in the Sep. It's going to move, but I don't think today is the day. Don't think today is the day. So you should still be in the June contract, M contract. Yes. Correct, Travis. Good call. Good call. Where you been, Travis? It's good to see you again. All right, folks. Well, we are going to get to Make Hope Money as soon as possible here. We are going to be about 8:20. I'm going to try and get it running. So let's take our deep breath. Be ready for the trading day. Stay humble, grateful, creative, and centered in your trading. You start to get emotional. Step away. Don't take that next step into the abyss. Be kind to yourself, be kind to others. Say a prayer for peace, and I'll see you in just a few minutes. If I don't see you, have a great trading day. See you in a bit.